Good morning, Trade Pros. Sound check. 1, 2. Let me move this camera a little closer to my face. All right, here we are. Good morning. I hope you guys have had a great start to the day. I hope you had a great evening. I hope you have a great life, and I hope you have great generational life as well. On our morning market update today, I'm just opening up the note. We're going to talk about a few things. We're going to talk about the CPI, probably the most important thing. Bank earnings kick off their earnings season for Q4. And also, we're going to talk about some call walls and put wall activity, the story on the U.S. session yesterday, overnight, and then the trading plan. We're going to get into it. So we got a lot to cover. I'm going to start out now. Let me just adjust the camera because it keeps saying that it's off. I think this one leg is... Anyway, I'm going to leave it. Let me turn off the squawk guy behind me. It was all the way up there somewhere in the top left. All right, so snapshot on the market. S&P is kind of flat for the most part. We just traded off the prior day cash close. All right, same with all U.S. equity futures. European markets are slightly more mixed, some downside pressure. 0.2 down on stocks and 0.1 down on DAX. Dollar index is flat currently. Japanese yen, big story across the pond, across the world. It's pressed up quite a bit at the 160 level. Previously, Japan has taken intervention measures on the open market. We're very close at 158.92. Something to watch for because Japanese yen does have more influence than you would think on U.S. markets. All right, it is the basis of the carry trade. Oil's up 1.1%. On news from Iran, we'll talk about that briefly. Gold is down 0.3% after hitting all-time high. There's profit taking. All-time high was 46.08 on gold. That's crazy. All of my gold chains and jewelry from the music production era seem to have been the best investment I've made in the music days. Bitcoin up 1.5%. Ethereum up 0.7. All right, today's main event was CPI, and CPI is a reading of inflation. The headline number consensus was 0.3, which annualizes to 2.7% year over year. All right, and the core was supposed to be 2.7 as well. Expectations for this report were to have hotter inflation. Most analysts were expecting firmer food and energy prices and expected an increase in inflation versus the projections. All right, and this is why I thought I turned them off. Hold on. The expectation was for hotter inflation. This is why when the report actually came out at less than expected, the market reacted pretty swiftly to the upside. It got excited. So what was the report? Well, the core inflation price for December year over year was 2.6% versus expectation of 2.7. And forget the expectation because this data is kind of important versus expectation, but it's more important versus the prior numbers because then that establishes trend and momentum. The prior number was also 2.6. So basically, it hasn't really moved. It's not that inflation decreased. It's that it decreased against the expectation. It decreased against an increasing expectation for higher inflation from analysts in the street, but the actual inflation stayed the same. And so this decrease essentially triggered the market to get a little more bearish, or a little more bullish rather. My apologies. Someone just turned on my car in the garage. My wife's up. I wonder if I should check. Nah, if they steal it, they could steal it. I just got it yesterday. I just got a new car yesterday, and I heard the roaring exhaust from the garage, and I hope it's... If I hear somebody driving off, I'll run after them. All right, here's the situation. So the inflation comes in cooler versus expectations of the street, but around the same as what it was before. All right, and this has impact on the Fed. The reason the market rallied is that it's assuming the Fed's going to be more dovish. But that's an assumption that you could actually test against real data. So I went and pulled up the Fed Watch futures for the January 28th meeting because the Fed does have a meeting, but they don't have a press conference in January. The first press conference meeting is in March of this year. So January 28th, they have a meeting. The odds are just 5% of a 25 basis point cut, 95% odds of no cut. So we're probably not going to get it this month. Plus, we still have February and March. We have 2 more monthly inflation reports before the Fed meeting. So realistically, there's not much of a Fed impact. For March 18th, the meeting, 1.3% chance of a 50 basis point cut, 27.8% chance of a 25 basis point cut. So total 29.2% of any kind of cut at all in March. It's still less than a third. It's still less than solidified. It's not a done deal yet. So the decision is live, but the Fed's position is convince me to cut. And so this is why all this data is so important. All right. And we're just up on March 18th meeting. We're only up 0.3% on expectations of rate cut odds. So we haven't really moved the needle here. And I think it's still too early for the real decision to be impacted. But we got one good inflation print under the belt. We're waiting for 2 more months worth of data. We have 3 more jobs reports before the next Fed meeting. We have a lot. So I think the market got ahead of itself. It was bullish going into the report, and it took it as an opportunity to get more bullish. But it shot up and then came back down to retest the level. Could be a rejection for the bulls. We'll talk about that in a moment. For the rest of the day, the economic calendar doesn't really lighten up too much. My phone crops it out when I spin it this way because of the camera lens. But at 10 a.m., we have Fed's Muslim speaking, my bad. He's a 2028 voter. He's hawkish. He's not on the current voting panel, but he's going to speak for an outlook on policy and economy. He's not a current voter. Doesn't really matter as much. All right, 10 a.m., we have new home sales as well coming out for September and October. It is new home sales data, but it's kind of old and stale data. So that's probably won't matter as much. But top of the hour, expect some volatility to impact the markets. All right, Iranian situation, we're going to talk about it from a non-political context. Donald Trump said he's leaning towards action, striking, because Iran apparently was involved in protester killing. Like, look, this stuff is so dark, and I know it happens. Just because you ignore it doesn't mean it doesn't happen. But this impacts real lives. A lot of the stuff we talk about impacts money, which money we could always make more of. We always have. It's not a problem. I've never worried about money in my life, and it seems to find me somehow. But for your well-being, it's down a darker path. And so I do have to talk about it, though, because it does impact the market, especially oil. If you're an energy trader, you should be following the storyline pretty closely. All right, Trump was briefed on military options against Iran. Iran said they're ready for any action, including military, so they're kind of pumping themselves up. The U.S. saying they're ready to go. U.S. is calling on dual citizens to leave. 4 oil tankers attacked near the Black Sea today. That's kind of my people, or close to my people as well, Bulgaria. And then this is the economic impact. Donald Trump said any countries doing business with Iran will pay a 25% tariff on all business with U.S., forcing allies to choose Iran or the U.S. So, look, all this is to say is that geopolitical tensions are heating up on oil, and oil is now coming at a premium. That's why we saw the 1% rally. If you're an energy complex trader, keep an eye out on that storyline. Very important. All right. Bank earnings today. Banks are down 2.4 to 3.6% on average on Monday on the news that Donald Trump wants to cap the interest rate at 10%. I was on the phone with American Express doing some pretty important business, and I asked the employee on the phone line, hey, how do you feel about today's news? Do you think there's a chance of happening? She hadn't even heard it. Obviously, the management staff at these companies aren't going to circulate this news because it's just going to make it worse. But I'm reading that it's probably not going to happen. There's no path to enforce it for the 10%. And so it may not happen, but might be a good buying opportunity for credit card stocks, especially AXP. I love the stock. I love the company. Longtime American Express Platinum holder. The card is a beast. All right, JP Morgan came out with earnings per share of $4.63. Expectation was $4.97, but revenue was 45.8. Expectations 46.11. So you could call this a top line miss. But there was some positive in their news report. Their fixed income and commodity revenue, their FIC revenue was $5.38 billion on $5.27 expected. That's a beat, and stock was up 1.9% higher in pre-market. All right, having already been up almost 0.8% before the report. So, about a percentage higher off of that news. All right, let's turn around. Look at some gamma stuff and call walls and all the fun stuff, and then build a story and get into the trading plan for today. And I'd love to see your comments as well. So let's go. You only get to see the back of my head once. That's why I spin and rotate the camera. And pardon me, I invited you over to my house, and you're going to see a mess in the back in the closet. Can you see the closet from here? Well, let me move. You can't because of the light. Yes, perfect. That is my hockey closet. Literally, there's just gear hanging and drying, and I have fans and dehumidifiers so I don't smell it. There's nothing like smelling yourself in your own house, right? Okay, let's do this. Mikey, good morning, brother. It's great to see you here. Triangle Trading for TTF, my brother. Welcome. And Dobrin Dobrev. That's a beautiful name. Probably Bulgarian. Hi. Oh, yeah, go. Yeah. If he wakes up, just leave the door open. Okay. You could send him in here. My bad, guys. A little bit of family. I do work from home and I love it. So, откъде взимаш gamma nivata? Oh, where do I get the gamma levels? We'll talk about that in a second. All right, let's start doing. I'll answer that because it's important. We had some discussion on that already. All right, so here's the story in the U.S. that's taking place in yesterday's session. All right, the gamma level is basically okay. Look, the gamma discussion is a deep one. There is ways to predict gamma using very complex analytics and flows. And it's still not accurate because at the end of the day, to know gamma, you'd have to know everyone's portfolio exposure. And it's not possible. The only people that know gamma are the dealers because they are the ones on the writing side of the contract. And any contract that's formed that anyone buys on the open interest, not volume, because you can trade contracts from one secondary party to another. But on the writing level, on the open interest, when you write a contract, right? The only person that knows their gamma exposure is the person that wrote the contract. So we'll never know. It's all a best guess. The way that I use gamma is I look at call wall levels. I look at 0 DTE options on SPX, which is the index. I look at the levels and then I convert them to the ES equivalent by subtracting the basis between SPX closing price the prior day and ES closing price the prior day. It's around 30 to 50 points in any given day. And then basically adding that to the levels to convert them to the ES equivalent. It's not a perfect science, but nobody can tell you what gamma factually is with a perfect science. Does that make sense? So this is why it's like, to me, it's a level above which there can be dealer gamma chasing. But on a net total, the projected gamma levels at the moment are bearish on SPY, the ETF, but bullish on the SPX index. The flip levels are down to the 6880s. So we're still positive gamma. And as the price expands, there's going to be gamma chasing to hedge out the book. That's all you need to know, especially at all-time high above 70.29, which is one of the biggest option levels in plays. You're going to get to see dealers having to buy the underlying asset to hedge out the risk, which creates more gamma, which creates more hedging, etc. All right. Hey, Kalinvas, that's probably the nicest thing I've heard today. Thank you so much. I know it's early in the morning, but you are great, the best market analyst. I appreciate you, and I don't take that lightly, and I don't know if I'm the best, but I'm trying my best. I don't think anyone tries harder than me. I'm looking at plus minus gamma regime volume trigger for triple Q at NDX. Check out Spot Gamma. And then the other one is called SPX Gamma. Those are the two providers that send really good data on that. All right, so let's take a look at the plan. So yesterday's story, we opened at 69.70. Okay, that's down here. So this is the open level. And then we had an immediate rally higher. Yesterday's plan, I was looking to be short below the 90 to 92 level right here. This was the flip zone. Obviously, we rallied right up into it. And the strength of the rally immediately told me I was wrong to be considering a short bias. All right. And it's okay because I flipped to the long side, but I didn't have a short trade. So I didn't lose anything being short when the market ripped on the open, just the opportunity to get long below. All right. But I've never lost a trade I haven't taken. I wasn't too mad, but I had a short bias and I had to flip it above the flip zone. That's why I literally call it a flip zone to mentally know what I have to do in the real time when I'm trading. So I flipped to the long side. I didn't actually get a chance to buy anything on the long side on the day. I kind of missed it all because it started moving so slowly. I was kind of in this little participation section, but the afternoon it followed through. So yesterday I had no trades. I was busy doing a transaction on a new vehicle and paperwork and a whole bunch of stuff. So it kind of worked out well. We rallied up into the prior day high of 70 quarter. before pulling back into the close at 70.50 and 3/4 on the cash market close. All right, and we closed there. All right, we closed at 130 million MOC orders to sell, market on close. So a lot of sell imbalance into this close, and we kind of, we pushed off of the high a little bit, but not much. Overnight, we had a pretty tight range. Price consolidated overnight between 98.75 and the 14s up until the CPI report. So pretty tight consolidation. All right. Then we expanded bullish on CPI, but we came all the way back and retested it. And we're kind of, this is why I marked the prior day cash close. For those of you that don't know, the 4:15 p.m. Eastern time frame is very important for the market. In the past, that's what would be called the quote unquote cash close. And then it would settle until 4:30. The market would reopen, but it would close at 4:15 p.m. There was a 15-minute settlement window where it would reopen at 4:30 and then close at 5 on the futures market. And the cash close was like the marking price for the day you had to have, because that was relevant for everything. So look, we pull back down to the cash close at 4:15 p.m. Eastern. And what do? We kind of hold it as support. So here's the trading plan today. All the analysis and all this cool stuff comes down to this very moment. The trading plan is this. Today I'm going to start with a bullish bias. I liked the expansion yesterday. I liked the expansion today off the CPI. I didn't think it was going to keep running up on a CPI report before the market's open. Not enough liquidity to support it. But I do think we try to explore the upside a little bit more today before we ultimately get stuck and fail and move down. All right. But we may continue to have one of those slow grind higher days all day. So because I'm bullish, I'm looking for very early on signs after the open to see bullish order flow. And if I see the bullish order flow, I know I got it right. And now I also have my levels of where to get in, because I get in at imbalance levels on the footprint chart. And that's kind of the bread and butter of my system. So if I see the buy imbalance is showing up, not only does it confirm my buy imbalance, it also gives me a place to set my limit for the entry. So I'm looking bullish, long above the 7,004 right here. This yellow box is always my flip zone. So as long as we're above here, I'm looking for longs. Where would I like to get it? The 15 might have been the only retest we get. But if we do come down, we could get down into this like 5 to 7 level. You got a lot of heavy delta here into the day before yesterday. You got a lot of heavy delta here in yesterday's session. So these are big support levels, but 8, 7 would be nice. Ultimately down to 4 and even would be a good entry, but we might have to pay higher to get into the play today, which means we might have to let it rip up on the pullback, find some buying balances to get behind and just give it the shot long. It looks like it could be one of those runaway bull days. If we get into the 32 to 36 area, the prior high, and we can't break above it, all right, if we get into the high here and we can't break above it, then it's very quickly going to start looking like a fade day to sell it to the downside. And what we're looking for there is big long positions that aren't getting paid or volume thinning out as market rallies. We're looking for typical signs of rejection in the auction process. All right, that's the trade ideas. That's the plan for today. Yesterday, we had 1.065 million contracts traded on the ES, the lowest day of the entire year. But it's only 13 calendar days. All right, we don't have to get that dramatic, but it is the lowest day of the year, statistically and technically. All right, great work, guys. That's it for today. That's a trading plan. We're starting with a bullish bias. We're going to lean on the bulls, and we're going to see what the open auction looks like, looking for early signs of bullish flow and looking for imbalances to get behind on the trading plan. So I love you all. Thank you for joining, and I'm still smiling internally about that comment. Thank you. I appreciate it. And I'm going to see you guys tomorrow. Tomorrow at 9 a.m. we do it again. Love you all. Have a great day. Manage that risk. Trade like a trade pro. And I will see you tomorrow, and away we go. I can't rhyme any more than that. Goodbye.